Hello everybody, it's Brendan Kutschbach and welcome back to the channel. If it's your first time visiting the channel, welcome. We talk everything business and finance, so if you're into that, make sure that you subscribe so that way you don't miss more informative content like the one that you're gonna see in this video. Without further ado, let's go ahead and get into it. So is the 2020 market crash still happening? At the time of this video recording, if you look at the US markets, specifically the Dow Jones Industrial Average as well as the S&P 500, it appears as if we are trending away from a bear market in which we entered earlier this year. So with that being said, does this mean that the US economy is in the clear? Unfortunately, no one on this planet can tell you what the markets are going to do. Not any one person, not any one group, not any form of artificial intelligence can tell you what the markets are going to do with 100% certainty. But we can make predictions on data that's available to us. So here is my prediction, a random YouTuber's prediction on what the US economy is going to do in the future. Personally, I think that we've only scratched the surface of this economic disaster, and here's why. From March 29th through April 4th, over 6.6 million Americans filed for unemployment, and economists are now saying that unemployment has reached about 13%, and that number is likely to go higher as this pandemic continues to spread. If this many people are filing for unemployment, it means that they have either been permanently let go from a job or they've been temporarily furloughed. And the only reason why businesses are letting go of all these people is because they are being forced to close down operations in order to respond to this global crisis. So now you have a situation where so many people are at home when they're usually working and they're not making any money. And if they are making money, they're making money through unemployment. And unemployment is being funded with money that's being printed. And by printing this much money, it's only inflating the value of the dollar, meaning that the dollar is worth less. So now it's going to take more money to buy the same things, aka everything is just going to be more expensive. And these employees that were laid off by businesses. And the only reason why businesses are laying them off is because they're forced to shut down operations, like I mentioned earlier. But now you have the employees who aren't making any money, but you also have the businesses which aren't in operation. So now businesses aren't making any money. So it's really a nasty situation to where you have both employers and employees just flatlining, making no money. So with all this going on, why the hell are the US markets trending upwards? How does that make any sense? It's because of that $2 trillion stimulus bill, the CARES Act. This is the bill that's funding those stimulus checks, grants and loans to small businesses, big corporate bailouts, and also expanding federal unemployment. In my opinion, this was a great effort by the federal government to prevent the economy from just continuing to tumble downward. We actually did a similar stimulus bill like this back in 2008 during the financial crisis. And I think this is a good strategy, but there are a few factors that haven't happened yet, and I think once those factors happen, it's going to cause the markets to tank yet again. The first factor that I think is going to cause the economy to tank yet again is at the time of this recording, Q1, quarter one reports of big corporations have not come out yet. Because for most of Q1, businesses were out of operations and people were out of work, it's normal that we can expect that the Q1 reports are going to show some sort of loss for lots of big businesses. And that's going to be a huge impact on the economy because when big businesses, the things that make up the top 500 companies in the United States, when they show losses, that's going to lower the value of their share price, which is going to bring the market down. And then investors who have money in funds or within these specific companies, if they see that the share price is going to go down, they're going to sell off these funds or these individual shares, which is going to make the markets go down even again. And this, you can see like a domino effect happening here. But that's only based off of Q1 alone. We're in April, it's officially Q2, and businesses are still shut down and people are still out of work. So if the economy continues to go in this trajectory, people are still staying home and not going to work and businesses are still shut down, we may see losses in quarter two as well. The second factor that I see causing the economy to go down is the increase in bankruptcies. Think of it like this. There are so many people going on unemployment right now, and the unemployment system is so bogged down, and it can take some serious time for you to actually start receiving unemployment benefits. But 80% of Americans are paycheck to paycheck, so if they don't get that bi-weekly paycheck, they're not going to be able to make their bills. And if they're not able to get on unemployment in time, then that means that they're going to have to start paying for all their bills on their credit cards, putting them further into debt that they're not going to be able to pay, and then they might have to declare bankruptcy, and if all these bankruptcies are starting to happen, that's going to cause the markets to go down. So it seems as if the world is just crashing down, the economic world is just crumbling down. But is there a way that I can be wrong about this? Is my predictions actually going to come true? Of course I can be wrong. Like I said, no human being or artificial intelligence can predict what the markets are going to do with 100% certainty. And going towards a more optimistic way of thinking, I think that there are a few ways in which the economy can recover. The first and most obvious thing that will help the economy recover tenfold is if we find a cure to this illness, whether if that's a vaccine or if we develop a concoction of pharmaceuticals that can treat it and allow people to recover. Maybe all of us even end up getting it and we develop some sort of natural immunity to it. But the point is, one day the world will move past this pandemic and things will relatively return to normal. Businesses will be open again and people will be back to work again. Now, I don't want to underplay that statement because this pandemic really has been a global catastrophe. People have lost their jobs, people are starting to lose their houses, and also more importantly, people have lost their lives and their friends and their family. It's been horrible, it's a tragedy. But my overall point is, one day we will move past this disease and we will get over it and develop some sort of cure or immunity to it, and that's going to allow things to return to normal. And once businesses are allowed to operate again and once people are back to work, we should start to see the economy to recover. However, with that being said, even if we do find a cure, the economy isn't just going to recover just like that once things go back to normal. Because right now, the majority of Americans are going through economic hardship. They're losing a lot of money. They're depleting their savings. And so we're going to be in a situation where people aren't going to go out and buy new clothes or book a lavish vacation or anything along that. People are going to be saving their money to try and recoup from this financial disaster. So without people doing the normal spending, then it's hard for businesses to grow. It's hard for businesses to make money. So it's just going to be a slow start until we get back to our normal and kind of get back into a full bull market. And the second way that I see our economy bouncing out of this is if the Fed continues to be generous by passing more stimulus packages like the CARES Act. However, I don't actually see the Fed being too generous by giving more money to Americans and passing more legislation to print more money and get it out into the economy, because like I said earlier, the more money that you print, the more that it inflates the dollar. And if it inflates the dollar, that means the value of the dollar is dropping, meaning that our money is worth less, and it takes more money to buy the same things. And so things are more expensive, not because prices are rising, but because money is worth less. And I have a video talking about this topic specifically listed in the description below. With all this being said, what are some things that we can do on a personal level to reduce our economic impact in response to these potential crashes as well as the crash that we're already in? Before we get into these things, remember, I am not a financial advisor, so what I say is not advice on what you should do with your money. I'm just some dude on YouTube who likes to research personal finance as a hobby. Whatever I say, don't take it as straight fact. Always do your own research and base your own research off of your own opinions and also off of professionals' advice, not just me, a dude on YouTube. The first thing that I've been recommending to my friends and family is if they have money in the market, specifically in index funds that track the S&P 500 and the Dow, is to not, and I mean not, sell those funds. And here's why. Even though that the economy has gone down and starting to go up again and go down again, and we're kind of in a volatile time where we're having green days and red days and we have no idea where the markets are going, my advice to my family is to always keep their money in the markets, because throughout history, our economy has entered bull markets where the stocks are going up and bear markets where the stocks are going down. And every single time that we enter a bear market, we always end up coming out into a bull market. And even throughout some of the worst recessions in the world, such as the Great Depression, as well as the 2008 financial crisis, we came out on top. And I understand that people have fear about keeping their money in the markets right now, but here's some facts to help rid yourself of that fear. The stock market crash of 1929, that's what led the US into the Great Depression, but we came out of that. The economy has also survived 2 world wars, the financial crisis of 2008, and right after 2008, our economy has thrived. And then on top of that, even during the 9/11 terrorist attacks, when the World Trade Center came crumbling down and the New York Stock Exchange as well as the NASDAQ was closed subsequently for 6 days straight, we still recovered from that. So I don't think that a pandemic is just going to kill our economy. I think that it's going to impact our economy, but I think our economy will recover. If there's one thing that we can learn from history, is that the US economy has proven itself time and time again that it is the wealthiest, strongest, and most resilient economy that the world has ever come to see. I personally don't have a shred of doubt that the US economy will recover. I'm still putting my money into the markets regardless of what's happening, because I invest for the long term. And like I said earlier, I see this as an opportunistic time, because even though that the markets have been trending upwards lately, we are still technically in a bear market, meaning that stocks are down from what they were last year. So now I'm able to buy shares of huge blue chip companies like Microsoft and Netflix and Apple at a fraction of the price. And yes, even though I'm still putting my money into the markets, I realize that there's going to be volatility volatility, and there's likely going to be volatility throughout the rest of 2020, but that's how bear markets run. But the strategy that I have is to continuously put money in regardless of what the markets are doing. So whether if we're in a green day where stocks are up or in a red day where stocks are down, it does not matter to me because I'm gonna always be putting money in because I'm investing my money over periods of decades. I'm investing for the long run. And going along with this point, the second thing that I recommend is for people to actually put money in the markets if they haven't already. And I think so many people are currently trying to time the markets and they're going, well, I'm just gonna wait till we hit rock bottom and then I'll invest. Or, oh, I'm just gonna wait till this drops a little bit more and then I will invest. Like I said earlier, it's so crucially important to make sure that your money goes into the market throughout a continuous point of time. To emphasize that point, here's some facts from my favorite book on investing, Money Master the Game by Tony Robbins. Throughout the last 20 years, the S&P 500, its average return was 8.6%. Now, if you were absent, meaning that your money was not in the markets for just 10 days out of the 20-year time span, that 8.6 return will have dropped to 2.5%. And right now, when we're going a period of massive losses, that's followed by massive gains. So to not have your money in the market, in my opinion, is foolish. You don't have the ability to time the markets, nor do I, nor do the billionaire people on Wall Street. No one has the ability to tell you which way the stocks are going to go, up or down on what specific day or time. So the best method is to continuously have your money in, continuously put money in. Every single paycheck, every single time that you get an unemployment check, continuously put money into the markets and make sure that you get the losses and you get the wins. And so so that way when the markets go up, you're up, and when the markets go down, you're down. You want to ride the waves with the market, not try and time it, because most people do not have the skill set to do so. I love teaching you guys about finances, but unfortunately, I still wish that you guys would have gotten some of this education within the school system. In my opinion, and from my experience with school, I was never taught anything about finances. I felt that the school system was really focused on teaching us about things that really weren't all that important, instead of teaching us about finances, which was crucial to us surviving in this world. I had to go get all of my education from exterior sources. I watched a lot of finance videos like this on YouTube, but I also listened to a lot of books on Audible. For those of you who don't know, Audible is a company by Amazon, and they basically have audiobooks for you to listen to. You can buy individual books and listen to those, or you can pay for an Audible subscription. It's $14.95. I've been a member for over a year. That gets you one free book a month, as well as 30% off of each additional book that you buy. Now, these are affiliate links, so if you were to click and go ahead and make a purchase, it's no extra cost to you, but I do get a small commission on the back end, and it's a great way for you to increase your financial education as well as help out the channel at the same time. Personally, I don't know what I'd do without Audible. I use it all the time. Whenever I'm cooking, cleaning at the grocery store, I have my AirPods in and I'm listening. When I'm driving to work, I have it going through the radio and I'm listening. So it's just really amazing because whenever I'm doing just the normal things, the normal day-to-day tasks, I'm able to listen and learn, and that's why I love Audible so much. As always, guys, thank you so much for watching these videos. It means the world to me. I don't know what it is about getting on camera. It's just, I feel like I have a passion for teaching, and I love talking about finance. That's a hobby of mine. I love learning about finances. And so instead of boring my friends and my family who aren't really all that interested in finances, I like the idea of where I can basically take what I learn, take what I'm using in my own life, get in front of a camera, tell you guys, see if you guys use it in your own life or not, see if I can help you out. And it's just a way to combine my passion of teaching and my hobby of personal finance in just one, and it's amazing. And I love all of you guys who sit here through the end and watch all these videos. It means the world to me. So if you really like this content, please hit the like button. That greatly helps the YouTube algorithm and get this video to more people so that I can help more people learn about finance. And if you want to see more content like this, go ahead and hit the subscribe button and turn on notifications with the little bell. That way you can always come back whenever I drop new content. And lastly, if there's anything that you want to see, any questions that you have, leave them in the comments below. My channel is so small, I'm able to respond to every single one of your guys' comments, and I actually love it when I get comments. So please leave a comment if you like this video. But other than that, guys, I'll see you next week. Thank you again for watching. You have no idea how much it means to me. But until next week, guys, peace.